Let's just take a look at the markets, which is firmly trading above the 5,000 marker, 5,026, in fact trading higher than yesterday's intraday high as well. So that's comforting for the market. There's support coming in from the rate sensitives and also from the cap goods engineering giants. L&T is up about 2% this afternoon. We're also looking at some of the commodity names, Jindal Steel and Power doing its bit in the market session. So the power stocks are active. Tata Power, Reliance Power also seeing some interest. IDFC, of course, is the top gainer on the index. On the losing side, you have Ranbaxy, which is correcting a bit after yesterday's move up. Maruti and Punjab National Bank side of Infosys are looking a bit weak.
All right, let's just look at some of the other factors influencing the market, and there continues to be a fair bit of focus on the rupee, which dropped all the way to the 53.90 level against the dollar in trades today when the market opened. Soon after that, you had the Reserve Bank of India coming into the market and issuing a directive, essentially instructing exporters that they will have to sell 50% of the positions that they hold in the current market, and that which essentially means that there's something like $5 billion in EEFC balances being held by exporters which they haven't sold, largely waiting for the rupee to fall to further levels before they actually come in and take advantage of that. So there's something like $3 billion that exporters will be forced to sell on account of this, and that should add to the liquidity in the system, which in turn should prop up the rupee. What you've seen happen with the rupee right now is really a reaction to the RBI instructions given to the market. The RBI, the other thing they've done, of course, is that the net open position limits, this is the intraday open position limit of banks, that's been increased by 5 times from the current level. So that's really a relaxation for banks. It just means that there will be that much more trading activity in the interbank market, helping the rupee to find a better level. You saw the rupee recover all the way to 53.10 mark. It's dropped again to 53.30 levels. So essentially, this is being viewed as a short-term measure by the bank, and also the RBI is beginning to run out of options in terms of saving the rupee or trying to hold the rupee back from visiting the lows that it saw in December. Not a very good move. It does help in the near term, but over the longer term, the rupee will stay under pressure. Again, the April trade deficit number is going to come in at something like 13 odd billions. That's the news coming in at the moment. Again, exports are seen to have grown by something like 3.2%. Imports at a far faster pace, close to 4%. Essentially continuing to widen the trade deficit gap, and that is going to continue to exert pressure on the rupee. So for today, you've had good news on the rupee front, but going forward, the rupee will continue to remain under a fair bit of pressure.